What is going on, you guys, and welcome to the video. In today's video, we got our July end, our 7th month update on our stock market portfolio challenge. We're going to be starting the video off with a quick recap and then moving along into a Q&A portion to finish off the video. I actually took a look and we have a lot of good questions that came in from you guys. So you're definitely going to want to stick around for that. I am filming this on Thursday, so it is July 30th. Numbers. We are missing a day. I am kind of jumping the gun here, but just keep in mind, this isn't including Friday's numbers, which is probably when you're watching this video. Taking a look at the screen, you will notice a bit of a new system here. We got some big improvements to comparing month to month. I've gone ahead and added some color coordination to show the moves between our top 15. Went with the top 15 here. And as you can see, we do have a nice little race up at the top 3. Joshua, Nareem, and Brian. They're kind of inching each other out for the top 3 positions. Seems like they're kind of in a bit of a league of their own here, but we had Brian dropping down to 3rd, Josh and Nareem popping up. You will note if there's no color coordination here, such as Ken or Carlos or Doug, no movement in terms of places. They're steady at their own. Tesla Ken's up, still hovering in the 5th place, still knocking at the top there. But hey, quick little update on the top 15. I actually had a comment come in from one of you guys saying that for this review, can we go over the original picks? Because people forgot what they submitted, and I thought, hey, that's honestly not too bad of an idea. So I'll very briefly share my screen here. We'll go through and you can take a look at what position you're in. Again, feel free to pause. Once you see where you are, we will flip over to a very brief scan of the actual submissions to see what stocks you guys picked, and then we'll move on to the Q&A segment. At the bottom of the list here, guys, not a crazy bunch of movement. Jason's still down here at last place with half the money he started with. Arvin's kind of challenging him there, 59K. Let's hop over into the actual picks list. And again, just to show you guys how this works, we have obviously the name of the submitter. This would be your name down here in the left column, the total portfolio value that you're sitting at, as if you invested the $100,000 across these 5 picks evenly. You have pick 1, pick 1, the market value, and then the performance. Pick 2, so on, so on, so on. So if you were somebody that forgot your pick, feel free to take a pause. I will try to get through this one quicker than let's try to blitz through it here for you guys. And coming down to the M's, we'll zoom ahead. I don't blame you for forgetting the submissions because, yeah, it was over 7 months ago that we put them in. And unless you wrote them down or you were really behind your picks, it's easy to let it slip your mind. But there you guys have it. Personally, I'm actually getting very excited to see the end of this, or the second half of the year, how this challenge is going to turn out. Just to remind you, there is a $1,000 prize on the line to the first place portfolio. I'm excited how this challenge has turned out so far. I hope you're enjoying the quick updates. We'll leave it as simple as that. Congratulations to you if you are up in these top lists that you see there on your screen. But let's go ahead over and dive into the Q&A segment of this video. And this was left on the community tab. A variety of questions that are in no particular order, but hopefully I can go ahead and answer some of your questions. I appreciate you all for submitting them. We'll start with the question here from Sam D. I actually left this one 2 minutes ago, it looks like. Can you talk about stock splits, and in particular, Apple's stock split that's happening? Is it good to buy now or wait till after it splits? Stock splits, I don't know why they get as much attention as they do. I know maybe for a beginner you can really think something exciting is happening, but there's really nothing exciting happening whatsoever. A stock split just basically takes the number of outstanding shares. Again, there's 1 million shares outstanding, let's say in a very simple case scenario, and then it divides them. And obviously the share price would get divided as well. I believe in Apple's case, I think they were doing a 4-for-1 split, meaning that for every 1 share of Apple you owned, after the split goes through, you will then own 4 shares. But of course, the share price will be cut by a quarter. So it'll be it'll be cut to a quarter of what it is. The analogy that I use and my favorite way to look at it is if you had a pizza, like a pepperoni pizza, whether you slice it into 4 equal quarters or 10 equal slices, it's still the same amount of pizza. they're just smaller fragments, and that's really all that a stock split is. So how do you play that in terms of buying? Is it good to buy now or wait after? Personally, I wouldn't really put any real emphasis on it. Financial Literacy asks, what is your opinion on restaurant stocks and other businesses that need people to physically go to their place of business for entertainment? Really good question there. And it's tough to really say. Obviously, I can't speak from experience here. I don't think anybody can really, for the most part, in terms of the craziness of the pandemic we're seeing now, where companies literally can't operate. They can't even open their doors. I think it's very, very serious, because let's not forget, if a company is not able to sell food or, Disneyland or whatever it is, they're not able to bring money in the door, no revenue. In many cases, their debts, like the loans, the debt they owe, the money they owe out to people, those obligations don't go away. And really, it depends on how well a company was positioned prior to this. Like if they kind of did their job of keeping some stable cash, really making sure they weren't over leveraged, borrowing so much money and really struggling to meet the obligations, it can be very tough. And it would obviously depend from company to company. Some companies are run better, some have bigger cash piles than others, but that would definitely play a role. Overall opinion on that is, it's going to be tough for a lot of companies, but I do like to think that a lot of the big businesses, some of the most well-run establishments that you see around us, you'd like to think that they've done a good job of having that cash reserve to help them get through a time like this, or at least being able to finance some money, take on a loan, and have a plan to kind of pay that off over time. But yeah, very, very tough. Question from Tsering Y. Should I be selling my gold stock soon? It's grown quite a bit during quarantine, and I'm worried it'll go down if I wait. And yes, gold has been a very, very good performer as of recently. Gold in general. I own Barrick Gold, which I had bought previous to this, so that's been an amazing position for me as well. And I did kind of think the same thing. I'll share with you my thoughts on this. There's two ways to approach it. If you bought gold with a short-term outlook, like if you bought gold as more or less a trade, like you said, hey, I'm going to buy this, I hope to sell it, make a profit. After a run up like this, I'd say, hey, maybe now's one of those good times to say, don't get greedy, and you've made a good gain. I'm sure you have if you bought some gold. Maybe just close off your position and say, hey, it was a well-executed trade. The other way to approach it, if it were me, is to say, well, do I want to own gold in my portfolio? Like compared to the rest of my holdings, do I want to have a segment for gold? And if so, hey, maybe you could just let it ride and just say that part of my portfolio has done really, really well. That's actually where I'm leaning more towards with my Barrick Gold position. I hate deciding when to sell out. And it's the question you're asking is, you're worried it'll go down and if you wait. It is stressful when you try to make these short-term plays. You don't know when to sell. You don't know how long to leave it for. So me personally, I'm just going to say, hey, I'll use that position as my gold exposure. It's done really well. I'll let it ride. I don't mind holding a little bit of gold in my portfolio. But I think that's the question you should ask yourself is, did you come in to this position with the expectation of selling it down the road, or did you want to just own gold? Because that may give you your answer there. That's probably how I would approach that question. How do I join that Canadian investing group? And from Ming Wu. And by Canadian investing group, I don't know exactly which one you're talking about there, Ming Wu. I know in the last video, we did pop up like a Facebook group, and there are a couple Facebook groups that I'm pretty active in. We actually have our own Facebook group. So the one you can look at is what's called Investing for Beginners, and then in brackets, Canada. That's actually the group that I operate. Me along with Darwin, one of my team members, we run that group kind of aside from YouTube. Completely free to join. Go ahead and join that. I believe the one that I actually talked about in the video was a different group that I don't run, but I'm a part of. It was Canadian Dividend Investing. And then, of course, if you're looking for a Canadian investing group, if you're talking about our Investing Academy, you can always click the first link down below to learn about that. We have a private group. It's a community for our students. Beyond YouTube, we are all Canadian, but that's, of course, the best investing group out there. It's not just a little free Facebook group. And I actually saw another comment here, which I thought would be a perfect one to lead after this, by Renewer. Where do I invest $30,000 in today's investment landscape? I have no current investment portfolio whatsoever. Thank you. And Renewer, I would say in this case, really, from the bottom of my heart, the honest way I would say this is take that $30,000, take a portion of it, and join our investing academy. We are literally taking a beginner like yourself with no portfolio through the entire process. We'll help you set up your accounts. We'll help you devise a strategy. We'll find what works for you. And we'll show you a list of our favorite investments. ETFs may be good for you. Stocks may be good for you, depending on, it's impossible to say right now, but depending on you, you can find a portfolio that works for you. So if I had $30,000 and I was just starting out, I would literally click the first link down below and look into our investing academy. But other than that, if you want another answer, where do I invest $30,000 in today's landscape? It's tough to say. Just I'd go for a nice diversified portfolio. To me, that's just the best way to invest in any landscape. If you've got a well-built portfolio, you can just let your investments do their thing and not have to stress about it. Question here from Zia Ansari. Is Shopify worth buying at current price? It's tricky to say. It's I would have said no a couple months ago, and it still keeps going up. So to me, I can see Shopify being like, honestly, it is a great business. I know from the whole e-commerce digital side of things. I'm quite familiar with Shopify. I think they've done quite well with drop shipping as a trend. Drop shipping is obviously one of the huge components as to why Shopify has done very well. It's the platform that people will often use. Definitely demand for their product, but I do feel like it's definitely a hype stock. Like to me, I personally wouldn't buy Shopify. It's not one that I can, it's too risky for me. And I'm even a young person. I just don't like buying into the stocks that are overhyped. And I feel it's, especially at a price like today, I wouldn't be buying into it at all. A couple questions to finish things off. Here's a good one from Stephen B. Big fan of this question, Stephen. If you own a relatively broad ETF, how do you feel about buying an individual stock that's already held within that ETF, or another ETF that may overlap a bit, like holding the S&P but also the NASDAQ 100 ETF? How about owning a company like BAM and then buying one of its subsidiaries like Brookfield Property BPY? Thanks, Brandon. Very, very good question there, Stephen. And I think let's see how I can address this simply. First of all, if you own an ETF, like let's assume the S&P 500, I personally have no issue with going out and buying, let's say you have some of your favorite stocks and you want to hold them individually. I have absolutely no issue with that. In fact, I actually think that's a good thing to do. Of course, you do have to keep in mind, as you kind of mentioned here, how much overlap will that be giving you, right? In the case of the S&P 500, which is the 500 largest companies in America, you do want to keep in mind that a good portion of that fund is invested in the FANG stocks. So Amazons and Microsofts and Facebooks and Apples, they do represent a very large component. Whereas, you'll find companies, I remember looking at Best Buy as just an example that pops to my head, or Under Armour, those represent like literally point something percent of it. So I would definitely factor the weighting in as to how much you choose to buy an additional stock to kind of complement that. You wouldn't really want to, especially knowing, basically just know the weightings, that you don't want to go too heavy into something. You don't want to be unaware of that. But absolutely, I do think owning a separate stock individually is a very cool thing to do. Keep in mind, as a individual share owner, if you go out and buy shares of Apple or whatnot, you do have, in theory, different rights than you do. You have shareholder rights. Different from the way you would, different from what you would have if you just bought the ETF. For example, you do get the right to vote on certain company topics. If you own a stock like Berkshire Hathaway, you can actually go attend the Berkshire Hathaway meeting because you're a shareholder, which you couldn't do with just an ETF. So there are pretty cool merits to holding individual stocks. It also feels good, in my opinion, to support a company directly by owning their individual company. So I think it's absolutely worth doing. I would do it. I do it. I have done it in the past. It's just, I would say, keep in mind, know how much weighting they have in the index or the fund so that you're not fooling yourself as to how much. In terms of overlap too, I don't think it's the biggest issue. Again, as long as you're aware of it. Even with the case of Brookfield, Nothing wrong with buying the big company as well as one of the subsidiaries if you really like it. Totally preferential there. Let's move on to the final question, and let's go with NTM. We get questions from him all the time. ETF versus mutual fund. Very basic question, but hey, if you're sticking around this long and you're enjoying the video, maybe you'll benefit from this. Pretty simple answer to me. ETFs are almost always, I would say, if you're investing on your own, like if you have your own Questrade account or your own TD, like direct investing account that you're managing, I would say 99% of the time you want to go with the ETF, because an ETF is substantially lower cost. The fees you pay are way less than a mutual fund, because a mutual fund basically has an advisor or a fund manager managing that fund. It's an actively managed fund. So there's a cost that's incurred to do that. They're trying to make plays here and there, adjust balances and whatnot to outperform the market. Comes at a cost to you. Whereas the ETF is very passive. It just replicates something. It just kind of follows an index. And if you do look at the studies, in most cases, I think about 80%, maybe even more, 80 to 90% of the time, the ETFs, the passive approach, actually outperforms the active approach. So index funds versus mutual funds, or ETFs versus mutual funds, I should say. So yeah, most of the time it's going to be ETFs for you. If you did want to work with an advisor because you want kind of like that support from actually working with somebody, they may have you into mutual funds because that's how they get compensated. It's not the end of the world, but I do think you can definitely save costs by using ETFs. But hey, I think those were some phenomenal questions for the video today, guys. Answer it there. Try to keep it relatively short. Don't know how long this video is going to be, but if you enjoyed the update, if you enjoyed the Q&A, feel free to give this one a quick thumbs up. I really appreciate you guys sticking around. If you're not already subscribed to the channel, we post videos we post this video every month for the next few months to see who wins this challenge. But the Q&A videos are scattered here and out. We post videos every week, and we're going to be posting them a lot more. So you'll definitely want to subscribe and hit the bell for that. We do, of course, have our Investing Academy. If you are a beginner, and like the questions we had today, well worth checking out. If you do want the guidance in the stock market, we'll embrace you with open arms and teach you everything to do. That'll be that first link down below. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.